Let's go across to our next guest. Rahul Sharma, Director, Head Technical and Derivative Research, JM Financials, is now with us. Rahul, thanks so much for taking out time for us. Let's start with the markets. What is the perspective that you have on Nifty, considering the event risk is now behind, the recovery we've had versus global markets? You think it's the start of a trend?
Yeah, very good afternoon, Pankaj. A lot of negatives are already factored into the price. We've seen the event through. We've seen India VIX cooling off to around 14 levels. We've seen the S&P 500 VIX, which has been a cause of a concern for the US markets, that also have cooled down significantly in the last few days. I think going by the way we are shaped in terms of the derivatives positioning of the market, which is FIs at extremely low, extremely high level of shorts. The shorts are alarmingly very high at life levels, and essentially a market which refuses to go down. So we've done the 16,800, 850 kind of a test of the floor a couple of times in the last few days, and every time the buying has just sprung up back in. So I think this time around, if Nifty does cross the 17,210 mark, I think that should invite short covering, especially given the way banks have been leading the market in terms of reaching the 200-day EMA. Bank Nifty has been the first index to do that amongst the two. And whenever we've seen in the past that banks have led the rally, we've seen the Nifty slowly, gradually following up with the Bank Nifty. So clearly, it is a strong case for possible short covering rally. And if it happens, I think we should see 17,500 to 17,600 on the Nifty, whereas Bank Nifty could very well be headed towards the 41,200 to 41,500 kind of 42,000 kind of a mark on the upside. So still we are in range bound. We have the weekly expiry today with 17,200 acting as a stiff resistance. I think most of the day we should be range bound for the day at least. But positionally, we think this is a market as long as we remain above the 17,000 mark on a closing basis, we should see a good recovery happening and eventually the shorts getting challenged in a significant way.
I got the point that you're saying that short rally is something which can happen. I just wanted to understand, FII net positioning is 90% short as of yesterday. You think it was based on this event risk, and that's why you're believing that a little bit of people who were just wanting for this event or maybe the next event to fold out will tend to cover, whether it's in their favor or not in their favor?
Yeah, so FIs have been aggressively shorting the market since it's been actually been 3 months now, and now that we've gone at record levels, which is why the entire concern is in terms of the extremely negative outlook by FIs. My sense is, once the positioning is done and once market refuses to break the 16,800 floor, eventually what will happen is we are also approaching the monthly expiry as well. And this time it is happening one day earlier. So we just got around 4 trading sessions after this. So that will also put a lot of, in terms of the rollovers and all, I mean, whether to roll over or not, whether to sort of carry these positions in the next month. And next month, we also have the Q4 or the annual numbers coming up, which should definitely be a cause of concern, especially if, the way we are positioned, on a consensus side. And consensus trades generally do not go right, which is why I believe it's better to be a contrarian at this point in time. And speaking of levels, I think this is one area where eventually the shorts will get tested. 17,210 is the level for today. If it happens today, it could intraday actually cause a move which could take us towards the next resistance, which is 17,300. So technically 17,300, anything above that should be a positional trigger, which should see us extending the gains towards 17,600 odd. Having said that, I think as long as banks remain strong, as long as Bank Nifty sustains above the 40,000 mark, I think the possibility of what we've said happening remains on the higher side.
Sure, Rahul. Since you pointed out about the monthly expiry and the option and the various things that will be at play there, I just wanted to check with you if you have looked at the latest this do not exercise option, which has been coming in from the SEBI. What kind of impact do you anticipate? If you can help us help for our viewers to understand exactly what it means.
Yeah, so essentially what happens is because we had the expiry, we had this right to exercise, the margins were on the higher side, and a lot of brokers were not allowing to trade options which were close to at the money, which is why the volume, we have also seen a volume drop happening as well. Now, with this being pulled out, obviously it will increase the participation, especially in the expiry week, which is where the premiums are very low and one can expect a bit of volatility to also come back. So my sense is it is good in terms of the market participation. It is good in terms of the volatility which we generally are associated in the expiry week, and also it will also help in reducing the margin requirement for the same. So I think net for the markets participants, it is actually a good thing to have, because you can trade more of the at the money options which are available. I mean, there's always a risk of they become in the money in case you are short on them. But I think eventually it should be a more constructive and a positive development as far as the volumes are concerned.
Sure. Rahul, and finally, before we let you go, give us your top stock recommendations as well. You are talking about going contrarian, have a bullish stance. So what are the top stock ideas?
Yeah, so we are going with a long short approach. One stock that we like on the long side is Titan. Now, this stock has been under pressure since November 22. After around 3-4 months of underperformance, there is finally some technical reversal that is seen on the daily charts. In fact, volumes participation also has been quite comforting. My sense is this stock should see a good round of up move. The first leg could see the stock heading towards the 2650 mark. Although from a medium-term perspective, we expect the stock to go even higher than that. 2800 to 2850 is where we expect the stock to go on the upside. So as a trading buy, one can look to buy Titan with the stop loss placed at 2440, and one can expect a good bit of up move in the same. The second one, which is on the short side, which has been a cause of a concern, it's an index heavyweight. That is also one reason why we've seen the underperformance in the Nifty, the correction in the Nifty getting extended, which is Reliance. Now, Reliance is a sector in itself, but somewhere or the other, it has not been able to cross its 20-day exponential moving average. In fact, all the short-term and long-term moving averages are suggesting bearish bias in the same. In fact, a sell-on-rise approach is what is advisable. And after the recent up move, we believe that the up move has played its part, and now another round of down move can happen. So we are expecting the floor of around 200 to 2180 being retested in the same. It's trading short. One can look to short Reliance at these prices. The stop loss can be placed at 2290, which is the high that we formed in this week. And we expect that another round of down move, which is a possible base formation, could be in the process as we navigate this period of volatility. So a long and short approach, once Nifty crosses the 17300 mark, I think that is the time we can possibly be all in, all long. Until then, I think it's best to take a balanced approach in the market, given the kind of texture that we have in terms of stocks.
All right, sir. Thank you so much, sir, for taking out time for us. Good to get perspective.